Hello! Why are cryptocurrency projects investing money in biotechnology? What's behind these moves? Could be a risk for science? We're going to review it in today's video. Listen until the end because I'm going to present different models to finance biotech and I want your opinion. Welcome to Taxi Biotech, a show to keep up with the latest news and updates from the world of biotechnology and to learn about its impact on the stock market. The stock data I present here is just a reflection of how companies or the clinical trials are progressing and does not constitute any investment recommendation. This is purely for entertainment. Alright, let's get started. I was preparing the classic episode on the top 3 biotech stocks of the week when I noticed that 2 of them had jumped over 100% because crypto projects had invested in them. These aren't isolated cases, so what's behind this movement? First, we need to understand that biotech companies are money-burning machines. They need cash to fuel research, clinical trials, and to pay their employees. And they don't generate profits because they are in the research phase. To keep going, they need funding. They can go public on the Nasdaq to raise capital, attract private investors, or sell part of their intellectual property. Small biotech companies are always short on cash and we look for it everywhere. And this past week something quite curious has been happening, something I haven't seen mentioned anywhere. Crypto projects are injecting money in biotech companies. Let's look at the terms. We're going to comment a few examples. For example, last week, MeiFarma launched a 100 million treasury project in Litecoin. In May, they had already mentioned their intention to look for strategic alternatives, but preserving their cash. In their pipeline, they have phase 1 oncology therapies. What's going to happen with those now? For the moment, the stock price seems to have reacted positively to this move. Let's check out more examples. Windtree Therapeutics, which announced another strategic reserve, this time in BNB, Binance token. 60 million provided by a Binance-related company. In their press release, they say they are the first BNB-related company listed on Nasdaq, and they say that this is critical for the ecosystem. They also say they aim to generate returns with that BNB, but will those returns go to science or to buy more BNB? In this case, the stock price is now below the level it was on the day of the announcement, here with this dotted line, so the market didn't react very well. There are another cases, like First Fertility, also on Nasdaq, which bought Solana in June, and again, the stock price hasn't responded positively. Moving on, in June, Coeptis partnered with Zeta Square, which is a Dogecoin mining company. The announcement says Coeptis is doing cutting-edge cancer research. Is doing or was doing? You see here in the webpage, from the future of medicine to mining dogs. Although this case, the stock has performed a bit better. Maybe there is more of a future in mining dogs than biotech. We also have Inovia, which they had this device for eye, which changed its business model and moved into decentralized finance through a partnership with Hyperion DeFi. And they invested in Hype token. They are also trying to sell off their device. In this case, the stock price went from $4 to the current $12. A pivot from biotech to DeFi, another change in business model. Another example, Sonnet, which over 800 million injection into the Hype token as a treasury reserve. They say also they'll seek partnership for their biotech asset. I assume they are looking to sell them, but I could be wrong. They do have quite few trials, to be fair, so they can sell them quite well. In this case, you can already see the reaction. The stock price has dropped a lot. So why is all this happening? It's happening because these companies are trying to replicate the strategy that MicroStrategy used so successfully with Bitcoin, putting Bitcoin in their treasury and issuing shares to buy more Bitcoin. However, these companies are betting on alternative coins that don't have the same level of support. For a biotech company, anything that moves the share price and bring in some money is welcome. And for the crypto company, it's a marketing tool. But there are different ways of doing this, and they don't all impact science in the same way. For example, two companies, NIVF and HOT, that put 1 million worth of Bitcoin in their treasury, not just to pump the stock price, but as an asset diversification strategy. Their shares have held up well since the announcement. So you can see that the level is give or take the same. So I call this my first model. Bitcoin as investment. You simply hope that over long term Bitcoin price will rise, and eventually you can use those gains to support your science, either by selling or through some kind of financial return. It has nothing to do with the second model, like the MicroStrategy and, in scientific world, similar scientific model. This second model is exactly what the strategy did. The idea here is that the Bitcoin never returns to science, because issuing shares to buy more Bitcoin would lose its logic if the coins are sold later. The key question here is whether your company is generating profits or not. If it is generating profits, you can balance both worlds, science and investment. But if you are not profitable, it gets tricky, because you'll need to put money from your strategic investment to your science. The third model is the one these alternative coins are following. The key here is that these coins need marketing, and having a company adding them to their treasury reserves is great news for them. Plus, since they don't have ETFs, they need some way to be publicly traded, and they find it through struggling biotech firms that are already listed on Nasdaq. In this deal, science is not the priority, and what we are seeing in most cases is that they'll try to sell the biotech part to other companies. The original biotech changed to other different things. Can both things be done at the same time? Still doing biotech under this model? Honestly, I don't see it clearly. These crypto companies want to maximize returns, and how exactly is spending on science going to bring them profit? They are not choosing companies based on their pipelines. They just want Nasdaq exposure and marketing story. Is there any way to make both things work together? Use the comments below to share your ideas. So what usually happens in these cases? Typically, they'll try to sell the patents and know-how, and if they can't, the knowledge then is lost. Well, this is something that's always happened and will continue to happen. However, I personally prefer that a pharmaceutical company buys that know-how and IP so they can keep developing and, if possible, cure a disease. That said, this is something we can't stop. Each company is private and can do what it wants with its research. And it's not crypto fault either. These projects are just trying to survive. And that's for today's video. Remember, I'm just laying out what's going on. This is the reality and we need to adapt. Take care and see you next time with more biotech and markets.